Hi, thanks for joining our Media and Marketing Services M&A Market Update. I'm Paul Winterflood, lead partner with the Media and Marketing Services Corporate Finance team at Kingston Smith. We advise businesses looking to sell or make acquisitions and work closely with other media sector experts in our accounting and M&A tax teams, offering a comprehensive full-service approach to transactions. I'm going to review M&A activity in the media and marketing services sectors in the second quarter of 2023. Looking at the trends, notable transactions before making predictions for the period ahead. Firstly, for those of you that haven't joined before, we track transactions in the media and marketing services sectors involving either a UK buyer or a UK seller, and we use that at the basis of this analysis. Firstly, let's start off with deal volumes. So 2023 got off to a flying start with 126 completions in the first quarter. There has been a bit of a drop-off in quarter two, down to 104, which is a 17% drop, but we're still ahead 6% on the year to date compared to last year, which certainly surpassed predictions at the start of the year. So we're seeing a relatively strong market and certainly strong in terms of the deal numbers we're seeing, but it's definitely turbulent. Since the end of the quarter, it's been followed up by significant transactions post the quarter end, showing there's a bit of a flight to quality going on. And we'll come on to that in more detail shortly. So now we'll just move on to sectors. So despite all of the up-and-coming digital capabilities, creative reigns supreme over the rest and is highly, highly sought after. The requirement to craft engaging content and execute online campaigns in the digital world is paramount. Data and analytics, UX design, and performance marketing are all key parts of the ecosystem. But ultimately, it's creativity that wins the battle for clients and customers' eyeballs and ultimately wins business. And this is feeding through to some of the transactions. Serial acquirer Definition Group acquired B2B tech and financial services specialist OTM. And in terms of some of the networks, Omnicom bought Dark Horse, which is a sports specialist. Dark Horse worked with brands such as TikTok, Shelter, and Nissan. And sports capabilities are another highly sought after capability at present. That's due to the growth of the industry with increased global connectivity. There's vast sums of money flowing around the globe. Clearly, the Saudi Arabian involvement in sport is much publicised, as well as as well as factors such as the US interest in English football, for instance. The ability to connect with a passionate fan base, as well as the link through to endorsements and influence capabilities, are another couple of factors which lead to sports capabilities being highly sought after by acquirers. And finally, whilst it didn't fall into our quarter, it'd be remiss of us not to mention Uncommon. That was a hugely significant transaction. A valuation of 120 million demonstrates the value that acquirers place on rare, high-quality creative capabilities. So just continuing on the theme of the networks, it's definitely been a much quieter quarter relative to quarter one. Quarter one saw a bit of a renaissance in terms of the interest of or the deal volumes from the networks, but there's still been some significant deals in quarter two. AI has been all the rage, both in and out of the industry, and that certainly extends to acquisitions. And if you look at some of the deals that have been completed here, so WPP, they bought global site branding agency AMP, expanding its generative AI and brand experience design capabilities. Publicis also made an investment in the space, announcing the full acquisition of Publicis Sapient AI Labs, which was the JV they launched in 2020, focused on R&D around AI, and that's definitely going to be a theme to watch over the coming quarters. Moving back again to creative, so further to the Dark Horses transaction, WPP bought a stake in Majority in the US, and IPG, through their FCB subsidiary, acquired digital-first creative agency Connect, which is based in India. So moving on now to the challenges, and it was a bit of a mixed picture across this group. So there was definitely some notable transactions here. Probably the most notable was the long-awaited acquisition of digital group Jellyfish by Brandtech. concluding a year of negotiations. Deal stretching is definitely a theme that we've seen in the market over the last few years, and in times of uncertainty and turbulence, buyers just like to take a bit longer to transact, as they're having to sometimes ride out uncertainty, and so it's not just clients where you'll be seeing a stretching in sort of things taking time to get over the line. Brandtech also followed up with the acquisition of AI creative and distribution platform Pencil. So again, there's similar themes evolving, and then some other transactions to note. So Stagwell continued the creative theme, acquiring the company of Huskies, and they followed this up with the acquisition of Jasper Advisors, which is a C-suite strategic advisory services business. And the desire for Marcoms groups to improve their consulting capabilities continued elsewhere with the acquisition of 140 by Next 15, but it was probably a quieter quarter for this challenges as a whole. Moving on to private equity, this chart will be familiar to many of you. On this chart, we track the number of transactions that have private equity involvement, either directly, where the PE house invests in a group, or indirectly, where a PE-backed group acquires another agency. You can see it's been fairly consistent, bouncing between 46% and 60% since COVID. At the end of last year, it dipped to just under 50%, and this was repeated this quarter. With the continued upward trend with interest rates, this could be impacting the ability of some private equity houses to construct competitive offers in some quarters, and maybe trade are becoming, or some of the networks are becoming relatively more competitive. But at a level of around 50%, it's still worth remembering that if you're considering selling your business, the chances are that you'll be selling to PE directly or indirectly, and that's a topic we talk a lot about with our clients. In terms of some of the PE-backed transactions to highlight, the digital services groups such as Crowd and Brain Labs, for example, were getting quiet this quarter. And we've talked about secondaries previously, where a business which has a private equity investor sells that stake to it has a secondary event, and so sells to a trade or sells to another private equity investor. There are a number of businesses in the space that have taken on investment from private equity over the last few years. And so we're expecting a wave of secondary transactions over the coming months and years. And one of those which we were watching out for was MSQ, and they now have a new partner in One Equity Partners out of the US, and LDC have also reinvested, demonstrating their confidence in the business and the wider sector, which I think is excellent news. This acquisition, or this transaction, will accelerate MSQ's international growth and enable them to build out its creative-led, data-driven and tech-enabled model, both organically and also through further acquisitions as well. So, which will lead to further bolt-on opportunities. Finally, moving on to the outlook. 2022 was a record year for deals in the UK media and marketing services sectors. 2023 started in a similar vein, and actually at the halfway point, we're ahead from the prior year. But the market has definitely softened. PE interest definitely remains high, but are finding transactions slightly more challenging. The stock market performance of some of the listed groups has been poor over the last quarter, which may impact deal making potentially. However, we're definitely seeing notable and significant transactions still, and I think the Uncommon deal, albeit it's in quarter three, is a good example of that. And I think that if anything, over the coming months, there will be a flight to quality, and the transactions which we see complete are likely to be those where there's where quality assets are bought. We're definitely optimistic that the market is going to strengthen from where we are at the moment, and we're definitely bullish over the medium term as interest rates stabilise and hopefully fall, and the economy gets back on track. The combination of strong private equity interest backed up by resurgent networks should lead to plenty of opportunities for transactions. So I hope you found the market review useful. If anyone has any comments, feedback, questions about the content, or are considering a transaction, please don't hesitate to get in touch. Thank you.